Hello, hello. Great to see everyone here today. I think we'll get things started in just a moment. We're just waiting for one more speaker, but I can see we've got ApeX, BitMEX, Midoji, Briley all on stage. Thank you guys for joining today. Really excited to get things kicked off shortly. Alrighty, looks like we've got Simran here now as well from Monaco. I think we've lost him. Maybe he'll rejoin in a moment. All right, let's get things underway just because I know people have been patiently waiting. So thank you everyone for joining today. Really excited to get this X Space going. We had a very exciting announcement at Chainlink earlier this week involving many of the partners involved in this X Space today. So we announced the launch of our 24/5 US equity price streams available on data streams across many, many different networks and used by yours truly joining the X Space today. A great way maybe to start us off would be to go around the room and just have everyone introduce themselves. So maybe we can start off with ApeX.
Hi everyone. Just sound check. Can you hear me? Hello.
Yep, we can hear you well.
Cool. Okay. Hi everyone. So I'm John from ApeX Protocol. I'm a content strategist and I'm part of the marketing team. So basically, ApeX is a decentralized perp exchange focused on delivering centralized exchange grade performance while staying true to DeFi values like self-custody, transparency, and traders' privacy. So we put a lot of emphasis on execution quality and but also on protecting our users from unnecessary exposure on chain. So right now, our focus is expanding into real-world assets, including US equities, RWA perpetuals, and all of them are powered by Chainlink data streams. So this allows us to support fast, reliable 24/5 markets while maintaining strong risk controls and protecting traders' intent. Thanks.
Awesome. Thanks, John. Great to have you here. Maybe we can go over to BitMEX next.
Hey everyone, thanks for joining. My name is Sidhu. I'm the head of strategy here at BitMEX. BitMEX is the OG crypto derivatives exchange, 11 years old and a market leader in the crypto space. And we're now entering the RW space with the first set of products around equity derivative perps and with a lot more RWAs to come as well.
Awesome. Thanks, Sidhu. Great to have you here as well. Maybe Midoji from Orderly next.
GM, guys. So yeah, can you hear me well?
Yep, can hear you well.
Okay, fantastic. So yeah, Midoji here, head of partnerships at Orderly. Basically, at our core, we are the infra that lets any trader in any chain basically tap into any market using their own chain funds. Right now, I think that as most of the participants in this space, we are laser focused on closing the gap between crypto and TradFi. We are building the plumbing for RWA Perps. So anyone can access and basically trade the world's biggest assets 24/7 with high speed, a nice UX. Yeah, like a very decent experience.
Awesome. Thanks for joining as well. Briley, maybe from Decibel.
Yeah, hi everyone. I'm Briley, head of Decibel Foundation. Very similar pitch here, but a perpetual DEX built on top of Aptos and incubated by Aptos. I think with Chainlink, we're really excited about RWA products, how we can build on top of Aptos to kind of enable as much composability as well as capital efficiency for traders within the Decibel ecosystem and the broader DeFi ecosystem of Aptos.
Awesome. Thanks, Briley. And last but not least, Simran, great to have you here, man.
Thank you for having me, guys. Simran Singh, CEO and founder of Monaco Research, previously heading up DeFi trading at GSR. Monaco Research is building what I would argue is a global trading network, right? I think the idea is to go beyond chains, go beyond tokens, and give people access to fragmented value that exists across various ecosystems, whether that's crypto products, whether that's RWA products, and all of that requires strong data streams and reliability, which thankfully Chainlink provides.
Thanks, Simran. Great intro. All right, thanks everyone for those great introductions. We're very, very privileged here at Chainlink to be working with so many leaders in the trading landscape. Today, it's mainly perpetual exchanges who we're speaking with. Been working with many of these folks for a long time across different markets, but great to be focusing on enabling 24/5 equities on chain today. Maybe to kick us off, it would be great to take a step back and talk about this meta around 24/5 markets. So, I mean, a lot of people in the audience may be wondering, what's the big deal about moving from regular trading hours to 24/5? Why is this such a meaningful inflection point for trading market infrastructure on chain? Maybe I'll just open the floor. Anyone who wants to kick things off, would love to hear your thoughts.
I'm happy to take a first stab. I was going to say, I feel like 24/5 is just the intermediate step to 24/7 in a world that's embracing hyper-financialization. I think both speculators and hedgers want the ability to access markets and express views when they want. You see this on the weekends typically, whenever there's a macro event, and crypto is the first asset class to, and only asset class to really get impacted because everything else is closed. So in order to bridge that gap, and I've never really viewed it as a CFI versus DeFi problem or a TradFi versus DeFi problem. It's really a convergence between two worlds and asymptotically. And I think people want to be able to access those markets whenever they want, wherever they want, however they want. And that's kind of the goal of this.
Maybe I'll just add to that as well. I mean, the demand for 24/7 is certainly there, but I think one of the key things about 24/5 and then 24/7 is really access to pricing and liquidity as well that people don't really think about. US traders who trade US markets benefit from very, very tight pricing and lots of liquidity, whereas there are a lot of traders outside the US that love US markets who don't benefit from this, or they have to stay up during their night to trade. So 24/5 and then 24/7, democratizes access to traders of US assets, or any asset really, but around the world.
So I think you more than most, BitMEX having been sort of the pioneer of perps in crypto, having been in the space for so long, this must have felt like a long time coming, right? I mean, there are other perpdexes launching at the moment who are sort of having the fortune of going live with crypto RWAs and many different asset classes at once. Really curious to hear, was this something that you thought would take this long? Were you surprised that this sort of transition is happening now?
No, I mean, we've been thinking about it for the last couple of years generally, and I'm sure the industry has as well. I think, the main issue has been really around liquidity. And so the fact that I know it's a circular function, but the fact that the mainstream exchanges, NASDAQ going 24/5 and NYSE announcing 24/7 really shows that, what we are all doing. We're a CFI exchange, the other folks here are DeFi, but irrespective of the type of exchange that we're bringing, this is the way the market is evolving. And NYSE announcing 24/7 is it's not an accident. I mean, it's because they've seen crypto succeed 24/7, and they've noticed that folks like exchanges on this call like ourselves are pushing the envelope to 24/7. And so I think this is just the beginning. There's going to be a lot more other asset classes that will come on chain. As you said, we invented the perp 8-9 years ago. I think the perp or perpification of assets is a given, and I think perps really fit multiple different asset classes, and we're excited to start with equities and take it forwards.
Great insight. I don't know if Briley, do you have some thoughts to share maybe?
Yeah, I was going to jump in here, and I think this is just a broader like macro movement in general. When we start looking at markets, we're seeing retail participation, grow year over year within trading equities, and I think that is something where you have people who work 9 to 5, and then when they log on, after work to look at any sort of investment product or look at any sort of trading product, it's kind of frozen. It's post market hours, and they're not getting kind of a live active view of what price is in that moment. And as this retail participation keeps growing and they're seeing more live markets that kind of crypto provides, and we've been providing on our side between perps and kind of 24/7 markets, I think this is just the movement of like a macro trend of more kind of like retail smaller participation. They want to see the live market. They don't want to log on, kind of see like a snapshot of the day. They want to be interactive and involved.
Absolutely. And Midoji, John, I don't know if you have anything else to add to that.
I think that most of the guys. Oh, sorry. Yeah, I think that most of the guys already mentioned what I was about to say, right? I think that money doesn't sleep, but the stock market does, right? Which doesn't make sense. I think that over the last 30 years, the internet and communications changed how we see the world, right? So yeah, it doesn't make sense that the world keeps moving on a Saturday, but then you check your portfolio and it's going to be frozen until, I don't know, New York wake ups on Monday. So yeah, I don't even think like 24/5 or 24/7 is convenience. I think it's just the natural evolution and the inevitable death of the price gap, right? So yeah, everyone should be able to react to like real-time news in real time. So yeah.
Yeah, I agree with everyone else. I think for us, 24/5 markets are really about the accessibility and efficiency. So traditional equities trading is limited by market hours, geography, and multi-intermediaries. So on-chain RWA markets remove many of these constraints, and traders can access US equities almost anytime from anywhere using stable coins without waiting for the market open or managing multiple accounts across platforms. Yep.
I think that's a great insight, and maybe just build on. I really like the word Midoji used, inevitable. I think this clearly is an inevitable expansion from regular market hours. And what's really exciting here, I think, the opportunity for on-chain capital markets is that many of the sort of extended trading hour sessions and also overnight are notoriously illiquid, and so perhaps this will even provide sort of an opportunity for sort of something closer to native price discovery for some of these markets on chain, enabling them to be 24/7 with people who are very used to also trading markets sort of round the clock. But yeah, very exciting indeed. So maybe just to continue this vein of thought, with the excitement that comes with this natural progression from regular market hours to supporting 24/5, and then in the future, perhaps 24/7 on chain. There are obviously new challenges that come with these, right? So new challenges around price discovery, risk management, market integrity, and solving for some of these challenges is non-trivial. So curious to hear from the panelists, perhaps the core challenges that you're facing in sort of preparing for the support of these markets, and now that they're live, also sort of on an ongoing basis. What are the things that keep you up at night?
Mm-hmm. I can actually take this first. So we face two main issues, right? The first one is that so when you move away from fixed windows or fixed times, right? Who do you trust with numbers when the biggest change is going to be close, right? So data is very big barrier, and I think that it was the main barrier for the last years, right? So yeah, it's like, okay, if NASDAQ is closed, who decides what is the price of stocks, right? So yeah, that's very important for us. And now that oracles and price feeds are evolving, that's also enabling us to continue developing the infra for building these markets on chain, right? And then the second problem for us is that it's very difficult, especially in the weekends, right? It's very difficult to provide the market and enable people to trade. I think that the solution that many adopted in the past was, okay, we're going to shut down the market during the weekends and then we don't let anyone trade. But I don't think that that's the right solution, right? You shouldn't be keeping your users from trading by closing the market. That's not the right way to do things. I think that the solution is to build better risk engines, like for example we're doing now with price bands, and not closing markets. So yeah, weekends are also one of the big barriers for us.
Yeah, I mean, I think I agree with Midoji. I mean, we all have the same problems. I think, Xtox and Ondo and all the Denari and all the tokenized stocks coming on chain and online has really allowed the bridge for us to go into 24/7 as the industry ahead of the main exchanges, meaning the TradFi exchanges, which I think, we're grateful for. Now they obviously come with they also come with their own issues around counterparty risks, again, the SPVs that are created here and everything else. But there is a form of price discovery. And, we put a lot of thought into the index at BitMEX because along with liquidity, those are, the two biggest concerns with any exchange. And, once the TradFi hours roll off, we take a kind of a wide look at pricing across other CeFi exchanges. We will soon look at pricing across DeFi exchanges, our own order book, and kind of amalgamating all of that into a pricing index. So I think that's kind of the key part there, along with obviously sensible leverage and how the risk engine works.
I would just say, I mean, I feel like fundamentally it's a risk management exercise, right? So one is the liquidity bit, which is finding the right partners who are willing to warehouse risk during periods of illiquidity. And like candidly, the price of NVIDIA should not nearly be as liquid at, I don't know, Saturday at 6 p.m. Eastern as it probably is on Wednesday in the middle of the market session, right? And so I think finding people who are willing to warehouse that risk is one bit. Two bit, I think, is just having stringent guardrails around this, right? So over the weekend specifically, you can borrow tried and true methods from TradFi, which has existed for decades, which I feel like crypto has a habit of rediscovering, right? Concepts of limit up, limit down, circuit breakers, just to make sure that markets don't get too disorderly. And the whole point is, if you're willing to provide these safeguards and safety nets for market makers, they're more willing to take aggressive views and warehouse more risk accordingly. So I think the goal is build a risk engine that can support that, take into account illiquidity premiums, and be realistic about the fact that, hey, price discovery is going to happen organically, but that doesn't mean you're going to have equal liquidity profiles across the board.
Simran, I think you bring a specifically like interesting insight to this, having also sort of previously been on the liquidity provider side of the table, right? Were there any lessons that you learned, perhaps helping to make markets? And I know it wasn't specifically 24/5 RWA markets, but were there sort of lessons you learned from that now you've been able to incorporate into sort of your risk management logic or how you approach managing risk for these markets?
Yeah, I would say, funnily enough, it's like, although we're talking about risk management, like capital efficiency is also embedded into the risk management. And what I mean specifically by that is tokenization for the sake of tokenization, I don't think is the answer. So when people talk about, let's say, tokenized equities, for example, if you don't give people or users something productive to do with those tokenized equities, then there's no real incremental benefit of me holding those assets on chain, right? I might as well hold them in my interactive brokerage account and lend them to short sellers and at least charge them margin. So like what we're thinking about is, as we construct our portfolio margin methodology and all of these other elements, it's one, capital efficiency should be there, and it's a huge unlock for market makers and institutional providers, and they're willing to take more risk because they're like, hey, for every dollar that I hold in spot assets, I can actually do something productive with it. And then the other side of the coin is, well, okay, if I can post this as collateral, how do I think about haircuts? Because $1 of a volatile asset should not be valued the same as $1 of a, dare I say, risk-free asset. So I think taking into account the fact that, hey, things have different volatilities, they should be haircutted at a different rate when it comes to portfolio margining, and thinking about shock scenarios. is very top of turban for me. It's one of those things where I'm like, the exchange's primary purpose is very aligned with the primary purpose of trading, which is survival. And I like to tell my colleagues is trading is a game that you can never win, but you can always lose. And the way to keep playing is always having chips in the game. And so exchange solvency and making sure that we're very thoughtful about liquidations, protecting users, both makers and takers, and being able to facilitate it is very relevant for us.
Awesome. Briley, John, I'm not sure if you have anything to add on this point specifically.
Yeah, I think we all echo the same thing, and I think it is exactly the parameterization of markets, the risk engine that you're building around this. I think we've kind of seen exactly these bad examples within crypto. For me, I always kind of point at these pre-market or pre-TGE markets, and then everyone kind of has to understand again these price bands and circuit breakers and all these TradFi risk techniques that been around forever, but crypto rediscovers it, and I think that's the things that we think about as we approach, RWA, stock perps, and building things within Decibel. So I think it's just kind of like we're all kind of echoing the same thing. Markets can be better here, and we're all trying to figure out the best way to protect users.
Yeah, fully agree with that sentiment. John, anything else you wanted to add on that?
Yeah, I totally agree. I think for us, the main concern would be in our risk control systems. So beyond like the price latency itself, we think that market context like liquidity weighted the bid-ask spreads becomes quite essential. So this allows us to adjust risk parameters more precisely and avoid over liquidating users during thinner market conditions. So that's something we get directly from the data streams, and it makes a difference for 24/5 markets.
Yeah, thanks, John. You beat me to it with sort of the next, the natural, I think, segue from here is, as you mentioned, many of the panelists raised that market context or additional market data is critical to sort of more sophisticated risk management for these markets, which have periods of trading that are very illiquid. And one of the things that we pride ourselves on at Chainlink as part of the launch of these data streams, in particular, is this new Oracle report schema that includes not just a last trade price, but also a bid and ask price, as well as bid and ask volume, a staleness indicator, and also a market status flag. So curious to hear from the panelists how this involved or informed your decision around perhaps like working with Chainlink or using Chainlink specifically to secure these markets, and how important is that additional market context around just receiving, let's say, a reference price for the market?
I think the short answer is super critical. I think it's a very hard, people think it's a very simple question to be like, what is the price of token X? And it's actually a very hard question. If you dig into it, right? Is it the arithmetic average of your bid and offer? Well, what if you have different amounts on the bid and the offer, right? Well, maybe there's people willing to buy 10 lots of something on the bid, but only 1 lot on the offer. And so understanding what the liquidity profile looks like is hugely important to the risk management and also pricing of these things. And I think Chainlink does a really good job of that by having liquidity weighted bids and liquidity weighted offers to reflect that. I think that is just one of the many inputs that goes into us into forming what the market price should look like. But yeah, I think having those attributes is super critical beyond just, hey, what is the arithmetic mid or even the last traded price?
Yeah, and I think add to that, Halcyon, also what's also great is you guys splitting the pre-market, main hours, main market, and the post-market, because some of these stocks and the indices are much more liquid across all three. Some are very liquid in the post-market, and so it kind of allows consumers of your data like ourselves to select which sessions we want for which types of instruments. And I think that flexibility is very, very important, rather than just say a plain 24/7 feed picked up from anywhere, where we can't sort of customize and curate on our side.
Thanks. I appreciate the insights, both Simran and Sidhu. John, Midoji, Briley, any thoughts on additional market data?
Yeah, I think that price is very important, right? But it's just probably the tip of the iceberg. You want to make sure that if there is a change in price, it is a real one and it is not just noise, right? So I think that also knowing things about like for example, liquidity depth, volume spikes, especially during thinner liquidity hours. That's very useful for us to make sure that we choose the right price. We avoid liquidating users, and we provide a safe experience for everyone.
Riley, John, I don't know if you have any thoughts on this specifically.
No, not too much to add here. I think we're all in the same boat always, and Chainlink as a data provider I think it's someone you can really rely on, count on. I think you guys are thinking about the problems the same way that we are, and so having that trusted data feed from you guys and working back and forth, as putting users first, safety of the markets first. I think that's exactly what we're looking for, and what we're glad to be working with.
Yeah, I think for us, pretty much agree with what everyone has said. I think the main concern is always in the liquidity during thinner market conditions, right? Because I think when it comes to liquidations, it can be quite a sensitive topic with our traders. So we need to ensure that accuracy is the most important part when it comes to adjusting our risk parameters. So yeah, that's why I think this is it's quite important that we use data streams that are reliable and efficient for ensuring that our risk control is working correctly.
Thanks, John. Just building on that thought track. In fact, one thing we just discussed was additional market context. So having data that supports the whatever index price is being used, right, as an input to the market price, informing critical risk controls like liquidations and order triggers and funding rate calculations. But apart from just having access to more granular data about the market, obviously a key consideration, I'm sure, for you guys is also the quality or fidelity of that data and where it's being sourced from. And another thing we pride ourselves on at Chainlink is having great partnerships with various different major data providers. In fact, with our new data product that's built on top of data streams, DataLink, which is an institutional grade data publishing solution, we've actually announced only in the last few months major partnerships with Deutsche Börse, S&P Global, FTSE Russell, and TradeWeb. And I think the announcements with these different data partners who are selecting Chainlink and specifically Chainlink's data streams infrastructure as the chosen infrastructure to publish that data on chain sort of is a testament to, I suppose, one, the distribution that Chainlink has, but also our focus around security and reliability and uptime. And I'm curious for the panelists, this sort of institutional validation, how does that help establish confidence in the quality and fidelity of the data you're receiving? And then how does that confidence perhaps transfer to end users on your platform or traders on your platform?
I mean,
Go ahead.
no, go ahead, Tom.
I was just going to say, I mean, I think people talk about, hey, the institutions are going to come, institutions are going to come. I think the institutions are here, and they're only going to continue to come here at an accelerated pace. I think if we're seeing this new paradigm shift, right? Where if you were simply building for a crypto audience in retail, you wouldn't really care as much about whether Deutsche Börse or S&P or BlackRock or any of these like big TradFi institutions cared about crypto data or even providing data to crypto platforms. But if we're building for the next generation, you're going to see this convergence of CeFi versus DeFi. I think getting these institutions on board and having legitimate brands and credibility that have been here for decades, if not, dare I say, a century or so, I think is super critical to that. This establishes legitimacy. It gives you access to alternative sources of data. I think it democratizes access to that data, and then also allows you to make informed decisions. Ultimately, again, it goes back to this like hyper financialization element of things, where people want to reduce the latency between being able to have an ideation and being able to execute it. And I think institutions are primed to deliver that.
And just to add to that, first of all, congrats on getting these big exchanges to give their data to allow the data to go on chain. I mean, I think for NYSE, when I looked a couple of years ago, 65% of their profits were from data selling. But I think what I'm most excited about, and of course the answer to your question is extremely important, because if our traders on BitMEX thought that the data was coming from very thin markets or not thought through sources, the confidence would go, and they are nervous outside market hours, and rightly so, and partnering with Chainlink and your vendors your data sources are very, very important. But I think the other thing I want to add is it would be really cool in a couple of years if everyone on this call's platforms are the ones that are setting pricing, and maybe we'll have the tail wagging the dog.
And I'll just echo that, and it's exactly this. When you have price feeds, you don't want it to be kind of like a rumor or through the grapevine of how it got published and sent to you. You want the direct institutional sources as like the source of truth. So Chainlink providing that is gives confidence for us building, and then gives confidence for traders and users.
Midoji, John, I don't know if either of you have anything to add.
I think we are all on the same page, actually. At the end of the day, good data is going to translate into a good user experience, right? That's the most important part for, I think, all of us, and adoption. So that's great.
Yeah, I think that Chainlink, since Chainlink works with institutions like Deutsche Börse, S&P Global, and others, gives us a lot of confidence, and that confidence transfers directly to our users because they know the pricing data behind their trades comes from trusted real-world sources, not opaque or black box systems. So I think when it comes to offering like RWA Perps, we definitely need institutional grade data that's fast, verifiable, and decentralized at the same time. And the balance is not easy to achieve, especially at scale.
Thanks, John. And don't we know that challenge well? Well, very excited to talk through that. Maybe with just the remaining time, got a few questions left for the panelists. Maybe we can pivot to look to, obviously, there's been a lot of excitement in the markets around US equities. There's been a ton of volatility, not just in the equities markets, but obviously across many different asset classes. And I think that's caught everyone's attention, right? That's sort of what's making up a lot of the timeline at the moment. If we look ahead to the rest of 2026, curious to hear sort of the panelists' views on how will the on-chain RWA market evolve, especially in the context of your trading platforms and the new trading opportunities that emerge. We've already mentioned things like expanding further coverage from 24/5 to 24/7. What are some other things that that you guys are considering at the moment or thinking about as you look to the rest of the year?
I'll kind of kick it off here. I've spent most of my career in emerging markets, 15 years now, kind of seeing the difficulties of kind of third world financial infrastructure trying to reach other capital markets, being able to have access to investment products from the United States or Europe, or touch any of these kind of RWA or the real life assets that we're trying to represent as RWA perps and RWA asset offerings. So I think 2026 is probably this big push as we have these crypto rails that a lot of people are already familiar with. Binance liquidity is massive. Binance's user base is massive. Those sort of crypto users and that kind of worldwide penetration. I think as we start to roll out further RWA perp support, we're going to see this globalization of access to all of the stock perps and all other RWA assets that we're trying to build for. So I think that's kind of my goal, and that's kind of what I'm looking for, is kind of like this proliferation amongst the crypto audience first, but then as soon as people realize crypto rails are one of the easiest things to onboard and kind of get money into the system, that we hopefully give access to these RWAs across the board.
I'm happy to add to that.
Something.
I think.
Go ahead. Sorry. No, sorry. Go ahead. You speak. I spoke first.
I was simply going to say, I think the emergence of perps and products around, for example, AI pricing. I think Architect is launching a perp product that's supposed to track GPU and memory pricing. I think those kinds of things are interesting because people want to invest directly in, and ideally speculate or hedge on the closest approximation to the thing that they want exposure to. So it's like, instead of trying to invest in NVIDIA or tech companies specifically, I can just invest in GPU pricing, especially if there's fundamental demand. I think seeing these kinds of native primitives emerge, and then also get liquidity is going to be very interesting for 2026 onwards. I think the other meta that still needs exploration is we've seen this incredible surge in prediction markets, right? Call chain polymarket dominate the space. But again, it goes back to having productive capital. If you have a view on something, but your capital is locked up for, dare I say, 6 months, it's not the most efficient use of capital. But if you can, dare I say, use that polymarket or call sheet position as collateral elsewhere and enable this composability, I think that is a huge unlock, and that's also likely to drive both institutional adoption and broader retail adoption. And so I think elements of composability with prediction markets or cool metas emerging on top of prediction markets is probably ripe for 2026 and 2027.
Yeah. I completely agree. And I actually think that the definition of exchange is evolving. And I think it's evolving more for TradFi people than for crypto native, right? Because we've been used to this experience. But one thing I hope is I hope the RWA concept disappear because I hate to use it. I think that at some point we will just call everything assets, and the blockchain will be the infra where all these assets are all together, right? And then blockchain gets more and more adopted, becomes the standard. I think that once that happens, we will have this asset layer where you will find stocks, commodities, you will find altcoins and crypto, you will find prediction markets, as you just mentioned, and I think that then you will be able to tokenize all the financial assets and create new primitives, more effective usages of money, right? I don't know, you would be able to, I think, have your Apple stock, for example, you will be able to use it as collateral, take a stable coins loan, and then do a cross-border payment in a matter of minutes, which is something that right now, today, if I explain this to a TradFi guy, he wouldn't believe me, right? Because in TradFi it takes multiple days and it takes a lot of middlemen. So yeah, I think that this is how the industry is going to evolve. And for these kind of things, actually, Chainlink, I think that the pricing and data streams are going to be crucial. So I think you're doing a great job on that sense.
Yeah, I just really echo what Midoji said around the multiple use cases. I think, whilst you can look at, super interesting new types of products, perps on this, and I just want us as an industry to not sort of jump 2 steps ahead when we're kind of just starting to line up with the TradFi guys. Historically we've looked at, launching quirky products. We haven't really taken off, hash rate perps or fork futures and things like that. Now I want to make sure at least at BitMEX that we don't do the same thing ahead, because there's a multi-trillion-dollar asset class on our doorstep here that we can easily dominate, just through simple things like portfolio margining, multi-asset margining, all the sorts of things that we either had or we're looking to do at BitMEX and other exchanges too. And I don't want to give the incumbent TradFi exchanges, I don't want to put the pressure off them, and we could dominate and take our fair share here, and I want everyone to innovate and focus on doing that first.
So I'm interested, sorry, Sidhu, maybe just to build on that. Do you think the natural sort of expansion here then continues to be USD margined perps, but just expanding beyond US equities to perhaps sort of very liquid commodity markets, non-US equities, perhaps with a lot of the upcoming sort of AI and robotics companies that will likely IPO in APAC? Like, it looks like there's a lot of interest in trading non-US equities, especially in Asia, and perhaps even that extends to Europe as well. Do you think like that is the natural progression? Are you seeing any appetite, like you raised earlier, an interesting insight about how Ondo, Denari, Robinhood, Xstocks are all launching tokenized equities? Do you see any interest about people being able to trade, let's say, go long these markets whilst also deploying these tokenized assets as collateral? Is that something we think is potentially near, or that there's any appetite for, or do we think something like that is probably some ways off still?
No, I think it's just a case of liquidity there. Once liquidity improves in the tokenized stocks, of course, we'd love to put it in as an asset class. Now, there is one caveat in the sense that you're taking counterparty risk to the SPV that tokenizes these products, which is not great. But then when you look at the DTCC and their announcement on tokenization, well, that's totally permissioned KYC and only if you're a broker dealer. So that doesn't work either. So we've got this sort of in between step that I think RWA Perps really fit well. And regarding foreign stocks, for example, we get a lot of interest from our retail base around trading Samsung as a very simple example. Now, Samsung's not listed in the US. They trade, I think, on LSEG or London Stock Exchange, and obviously they trade in Korea. And how do we bring Asian, popular Asian stocks? And Samsung, is 40% of the Kospi. How do we bring those across? How do we do multi-asset margining? Now, they may be US dollar based or won based or real based, but you want to be able to take multiple currencies, obviously with the right haircut, but also multiple crypto collateral as well. And I think putting all of those together and offering portfolio marginings for longs versus shorts is a killer product for retail traders and professional traders.
Yeah, absolutely. That sounds like a busy roadmap for 2026. A lot of food for thought. Maybe just building on that. If you had any advice for builders or teams looking to launch RWA markets on chain, what are sort of the main piece of advice that you'd probably give to them to set them up for success?
I think for me, one of these things is really identifying the pain points that exist already. And when I kind of talk to people in the US or a lot of people in Europe even, and you try to explain, stock perps, RWAs on chain, they kind of ignore it because they don't have that pain point. I have Robinhood, why do I need to do any of this on chain? Why does this make any sense? And so even if they're building something adjacent, they don't quite understand the pain points and people's problems that exist today outside of kind of like their narrow scope or kind of like localized market. So I think as a builder, you really need to understand, some of these problems are bigger than maybe what you have, and start building towards, solving those.
Awesome. No, that's a great insight, Bradley. All right, just as we finish up, perhaps for the panelists, if people are looking to find out more about your projects, where's the best place to go and learn about them? Maybe Simran, we can start off with you.
Yeah, happy for folks to visit xmonaco.com or reach out to me at XurexTurbanUrban on X or TurbanUrban on Telegram.
John, what about yourself? If people are wanting to learn more about ApeX?
Yeah, I think most of our community members are on our Discord channel, so you can always reach out to us on Discord. Our entire customer service team is 24/7 on Discord, so if you have any questions or anything you wanted to ask about the project, can reach out to us on Discord itself. If you want to learn more about ApeX, you can also check us out at apex.exchange or follow us on X at official ApeX Dex. And if you're a builder or protocol looking to launch RWA markets, remember Chainlink data streams is the foundation you want to start with, especially if reliability and trust matters to your users.
Amen to that. Thanks, John. What about Sudu? If people are wanting to learn more about BitMEX, where can they do that?
Yeah, please feel free to take a look at our website, bitmex.com, or to learn about services and kind of educational content, bitmex.com/blog, or on X, hit us up at BitMEX.
Awesome. And Midoji, if people are wanting to learn more about Orderly?
They can either reach out to me or to the main account. I think it's also in this space at Orderly Network. If not, the website, orderly.network. Yeah.
Awesome. And last but not least, Briley, if people are wanting to learn more about Decibel?
Yeah, of course. You can follow us at Decibel Trade. Also, if you want to check out testnet right now, decibel.trade, so www.decibel.trade, and then obviously my account's here. Feel free to reach out. DMs are open. Always here to help out, see what people are building, and how Decibel can help you.
All right, and finally, just for those wanting to learn more about the new 24/5 streams equity offering that Chainlink has recently launched, please feel free to visit us on chain.link, where you can have a look at our docs or fill out a contact form. Also, keep an eye on our socials for more upcoming announcements. It's been great to have you all today. Thank you very much to all the panelists for joining. It's been a pleasure hosting you and a privilege to work with you all. So really appreciate it. Thanks for joining, guys.